Hay bastantes. ¿Listo? Bueno, entonces con ustedes, por favor, un aplauso para Albert y Chloe.
Thank you very much indeed. So microphone is working. Everybody has their coffee? Yeah? All good to rock and roll? Excellent. Very good. Very good. So indeed, my name is Yannick Ouwetop. Today I'm accompanied by my colleague Chloe Katz. So for Chloe, this is actually the first presentation for Backbase because he joined last week, actually. So congrats to that for taking the risk to directly go on stage. Really like that appetite. But, sorry? Sorry? Yeah. Maybe. I'll leave it up to her to decide. So let's see if this thing is a bit working. Yeah, there we go. So I actually want to start off with a brief quote. I think everybody might have heard about this one. But this is something that really runs through our DNA of our organization as well, is that software is really eating the world, right? Now, from our perspective, this is not happening in only our industry, in banking, but it's happening in pretty much any industry, any given industry, right? So if we take just a quick example of something very conservative, old-fashioned, like the taxi branch, right? So we have a company called Uber. Now, this little app and the platform behind it has actually completely revolutionized the way we use taxis in that sense, right? So they also now diversify into Uber Eats and a few other industries. But these guys completely changed the industry, right? Now, the way these guys are operating actually is also quite controversial because they generally just set up shop in that sense, or at least they land their platform in a given country, they just run the business and let's see what happens, right? So very often these guys are getting into battles with the regulators because taxi branches, especially in my continent, in Europe, is heavily regulated, right? So with Uber, they don't care. They just set up shop. They are amassing the customers to run in their favor, and they're actually forcing the regulators to change the regulations in that particular industry, right? So it's a very interesting model of just, maybe it's not the right word, but cockiness, but I really like the way, we're entrepreneurs, we're just going to do it, and let's see what happens, right? Now, the taxi branch is, of course, not only the only industry, right? So we have another example of an industry. There we go. So who's ever heard of this company? Yeah? Who's ever booked through that company? I think a lot of people as well, right? Now also these guys, they run on one single platform, right? And they are having a global coverage, right? So the funny thing is these guys are extremely scalable in their business model, right? So they're by now the biggest kind of hotel chain, you could even call it, without owning a single hotel room, right? And these guys are making this possible because they run on one solid platform and they're making their customers very loyal because they're meeting a demand that was not out there yet before, right? At least not in this fashion, okay? Now, by popular demand, these guys have been able to revolutionize their particular industry, right? But, like I mentioned before, we have seen this all happening in other industries as well. So what makes these guys special is that because these guys are running on a platform-based scalable business model, right? Where if they want to grow, they grow with a very slim incremental cost level. Because they are not, like, in comparison to a lot of their competitors, asset heavy in how they operate their industry, right? So if I take an example for banking, the industry that we service mainly, it's a lot of banks have a lot of branches throughout the country, and they have centered their business model around that branch, right? Now, what these platform guys are doing, they're actually basing their model around one digital platform, and it doesn't really matter with what kind of a screen you're connecting to, let's say, for instance, an Uber or a Netflix or an Airbnb, right? Because it's a platform-based business, and that means that these guys can grow quite rapidly with a very incremental cost in comparison to, for instance, the traditional business models. Now, for instance, even in my country, in the Netherlands, a few years ago, we had a really large retailer called V&D. I'll spare you the details, but these guys have been operating for at least 150 years in my country, right? Now, from one day to another, these guys were still the biggest retailer in my country. They went bankrupt. Very simply because they didn't change their business model in a digital first kind of a strategy, right? They completely missed the boat, if that's a correct saying in English. They completely missed the boat with riding the digital wave and going to the online business. And they were still relying their business on the model that they have been deploying in the last, let's say, 150 years as well, right? So from one day to another, more than 10,000 people got without a job, disrupted the industry significantly, of course. And you see that, from our point of view, you need to really start rethinking about how your industry is reshaping, right? So the new customers that are getting in, they're having different expectations, and you need to meet that demand. Okay. Now, like I mentioned before, we've seen this happening already in a few different industries, right? So the example this morning that was mentioned with Blockbuster, I think a fine example of being more protective with your existing business model and not looking out the door what's really happening, right? Now, the same has happened in the travel industry, like I mentioned, and today we see exactly the same happening in the banking industry, in the insurance sector, in healthcare, in the automotive, for instance, as well. So the question we always ask when we're dealing with our customers is, where do you really want to be in a few years from now, right? Are you going to ride that digital wave, or are you going to be protective with your existing business model and thus risking the likelihood of actually going bankrupt? Okay. So from that perspective, so if we put this into a very nice graph, right? So we have the incumbent business models where, for instance, in the banking industry, again, you base your model around the branches that you have throughout the entire country, right? So this is servicing a good need, but we generally tend to see that there are new market entrants coming up, either from foreign companies or neobanks that are being set up, for example. They're starting to eat away the market share that you currently have. Right? So we generally tend to see that the traditional companies are declining in market share, and that the digital native boys, they're really picking up, and they're going to actually take over that leadership position. Right? So the question we always ask is indeed, well, are you going to be protective in your model? And are you going to have the likelihood of even going bankrupt in that respect? Or are you going to, for example, invest in some digital side business where we say, okay, let's start up an innovation lab, let's do some nice stuff, but please don't touch my existing business. This could mean that you might survive this digital disruption wave, but you're not going to be the big boy out there anymore as you were before, right? Or are you actually going to really look at, okay, how can I transform my organization? Can I really transform into becoming a digital native player? And am I going to be the guy that is going to kill my competition? Right? So that's the question very often asked. And for every industry, there are different stages of this particular wave, but this wave is happening in every single industry. Okay. So how do we really become a digital-first company? Right? So today we see a lot of enterprises that have digital as a kind of a side business. So for in retail, we've set up some nice online web shop, but the cornerstone of our business model is still the retail branches that we have throughout the country, right? So the mission that we want to put forward is, okay, we're really going to reinvent ourselves. We're really going to be a digital-first player. So how do we do that? So in essence, there are three components that are critical in this particular journey, right? First of all, as usual, is the customer. But not only the customer, especially the customer experience, right? Secondly, if we really understand what the new customers are really wanting as a service from my company, we can start looking, okay, well, how do we rejuvenate our business model, right? And in that sense, the next step, which is very critical as well, is how can I speed up that transformation, right? How can I make sure that I'm the first player that is really truly native in the digital landscape and are really meeting the desires and the needs from the customers, from the new ones, right? So these three components are super critical. So if we just zoom into, for instance, the customers, right? So from our perspective, if you look at your traditional business model, it works perfectly well for the classics, right? These are folks that are perfectly comfortable with doing shopping still by getting into your car and driving to a supermarket, or they go on a Sunday afternoon to XYZ to, for instance, do some clothing shopping or whatever, and these are perfectly comfortable with the existing way things are going, right? However, we also in that landscape, we see that there are some converted customers, right? So they still go out to do their shopping, for example, but they also like to order something online, right? Now and then. Now, the third generation, and that's, I think, the guys that are becoming more and more powerful in terms of money, is Generation I and Generation C, right? So these are people that are having, that are really embracing those new models, right? They, by default, if they want to have a taxi, by default they grab their cell phones and look at Uber, right? If it's available in this country or this city, by default, right? So these are people that are heavily users of the digital channels. But what scares me a little bit more is the next generation, right? So the kids from this Generation Y and Generation C, what are these guys wanting, right? So by default, I don't have any kids, but I heard this very often from some of my colleagues. By default, they say that, look, by default, I go to my iPad, I see if they have an application from this particular company, and that's how they start their customer journey, right? They don't go out the door anymore to look if they have it around the corner, right? They, by default, go to an online channel. So these generation, of course, they don't have any buying power yet, but as soon as they become older, they also start to becoming, they also need the services from your company, and they want it digitally only, right? So if I move on. So let's take an example once again from the banking industry, right? So in banking, a question that I would like to ask in the bankers in the room here is, how long does it take for you to onboard one new retail customer? Is it 1 minute? Is it 5 minutes? Is it an hour? Is it a day? Or is it a week? Which category would that fall? Any bankers in the room? No? No, nobody dares to? Okay. So in generally speaking, I'll give an example from my country then, just to make things a bit more neutral, right? So in my country, we have a bank called ABN AMRO, right? So before 2012, onboarding a new retail customer would take an average between 3 and 5 working days, right? Which is, from my point of view, horrendous. Because I, as a, for instance, digital native person, if I would, for instance, relocate from my country to another country and open up a bank account, I just want to go to my cell phone when I'm lying comfortably on my sofa. I want to open up the mobile application and I want to onboard there, right? So this is what companies like a Revolute or an N26 are doing, and they're moving also into the US, I think, shortly as well, right? So these guys have a complete seamless onboarding flow because they are understanding perfectly well that that is the cornerstone of the journey that new customers are going through, right? So they have perfectly, they made it actually quite perfect to fully digitize onboarding, right? So you can onboard within a few minutes by using your cell phone, right? So you can already start doing banking after a few minutes of signing in by using the technologies, for instance, that you use on the screen. Obviously, it doesn't stop there, right? So if you are very digitally savvy in your onboarding, you also want to do it with all the other services, right? So we strongly advocate that self-service is pivotal for a bank to improve their cost-income ratio, for example, right? Because the more people you need to service existing customers, the less profitable you're going to be, right? So also there, fully digitizing all those surrounding services is critical. So just an example, even with the Revoluts and N26 of this world. So the funny thing is that you could argue that these guys are just selling a debit card. So yeah, who cares? It's not going to be a profitable product anyway, right? But by default, I just closed a new mortgage for a new apartment. Not that I'm rich, but just needed a new one. But so also there, by default, I first started looking at my existing bank where I'm currently banking, right? Because by default, that's the way I do my business. If I would have been with Revolut or N26, that would be the first default action that I will take to look at getting another banking product in that sense, right? So, of course, for instance, debit cards are not very, it's not a very profitable business. However, if at the rate that these guys are growing, if those Generation Y and Generation Z are becoming older and older, they start to request different products, loan products, mortgage products. If they do well in their business, maybe even asset management, right? So these are products that are more and more, gradually more profitable for a bank to have, right? So, for example, with the Revolut guys, so in the first 24 months of operation, they acquired nearly 4 million new retail customers, right? Larger than the population of Puerto Rico. So, and the funny thing is they did that without owning a single branch, right? Everything fully digital. So these guys can really scale and have just a small incremental cost when they do scale, right? So it's a very profitable model. And the funny thing is, if you look at the subscription model that they actually give a free bank account if you just take the standard services, right? I'll elaborate on that in a minute. But the key takeaway here from this particular portion is that really focus on the digital first customers, because these guys are going to grow up and they're going to have that money to spend, and that is the new generation, and that's where pretty much any industry is going to, right? Now, if we look at the business model, right? So if I look at the earlier chart, we wanted to have a look at, okay, how do we really build a new digital business model, right? To go away from the likelihood of even going bankrupt, or even move away from the likelihood of that I will decrease my market share, but I will sustain. But I want to be the leader in my industry, right? So how do we do that? So, like I just mentioned, that subscription model, the funny thing is that these guys are really actually buying up the market share by offering a free debit card, right? So for every bank, traditionally speaking, you need to pay something. These guys give the standard stuff for free, right? Because they know if they are growing and they're scaling, they own the customer experience, right? So if they move on, for instance, with into other products, that's where you actually see that these guys can make money, right? So they base their business model just on buying the market share, in essence, and growing that footprint. And through that partner ecosystem that they have, they can actually start to become profitable, right? Because they own the customer experience. Now, how do we improve speed? Now, in the essence, what we always want to advocate is that we see that a lot of industries are relying on past performance, historical performance, in going forward, right? So they base their models on historical data going forward. And the historical data very often was founded on the economies of scale, right? But as we see that we have individualized pretty much any industry that we operate in, we see that leveraging these economies of scales are becoming less relevant, right? Because if you have a company like an Uber coming up and you have 500 taxis, well, it's very nice for you, but you are the one with the assets, right? You're going to be screwed in that sense, because these guys can grow much quicker than you can, because you need to maintain those taxis, you need to pay all your drivers, you have your unions to deal with, etc., etc. All these things are amounting up to cost. Well, the Ubers of this world, they just have that platform, and everybody is responsible for their own well-being, right? So in that sense, it's a far more economic, scalable model rather than a traditional business model that a lot of taxi companies have, right? So the problem that we see is most of us are really big boats, right? So it's very hard to maneuver a big boat because you're big, very simple. So how do you actually break that down into small little speedboats, right? So the essence is that we want to move, even with big companies, to a mindset that is really focused on becoming agile and learn from the startup industry, right? The startup industry is, it's all about teamwork in that sense, right? But not big teams, small executional teams. So if you work, for instance, in an agile fashion in your IT industry, we always strongly advocate to just have squads of like 8 to 10 people, cross-functional, that are having one particular role to do, and then reiterate that continuously with adding new functionality, because in that way you you can learn fast, but you can also fail fast, right? So failing fast is pivotal, like mentioned by my colleague from Google before, and to learn as an organization, right? So obviously every project has to start with the end customer in mind, right? How does he benefit from this particular project? If that question cannot be answered, don't even start, but rethink what you need to do. Okay? So just a quick example of the development bank in Singapore, right? Other side of the globe. So these guys are a bank, obviously, with 22,000 FTE. And they want to adopt that philosophy of becoming agile, right? So how do you move that big a boat into a sea full of sharks? So the way they've done it is that they actually have implemented a obsessed view of the customer, right? So every project has to have an answer to that question: how does the customer benefit, right? Question is unanswerable, don't do it. Put it in your junk folder. right? Also there, it's a very strong data-driven organization. And I'm pretty sure that Google's also helping these guys out through their analytic module. Because also there, they want to base the decisions on data, right? Now, thirdly, they want to implement that risk and experiment type of philosophy, right? So if you don't dare, you don't gain. So if you stay risk averse, like a lot of banks traditionally are, you're not going to move forward, right? So you need to have a more risk type of an appetite when looking at your customers, right? Now, fourthly, of course, they implemented Agile, which I think is a no-brainer nowadays. And lastly, they really adopted that learning kind of a culture, right? Which is pivotal in improving your organization and really improving also the quality and your speed of execution. So in that sense, I think this is quite similar to what you have discussed earlier indeed. It's that we really want to shape the future of your organization as a startup, right? So in that sense, people always come up with ideas, especially new employees. You build that from scratch. You code it in that sense because we are an IT company, so this is our lingo. But then of course you measure it, see if it's effective or not. And if yes or no or mediocre, you of course learn from it, right? But in that sense, again, we don't want to end up with a massive project and then wasting 32 million euros to Accenture by implementing it in a big fashion, right? So if you reiterate it continuously, that's the way going forward. Okay. So with that being said, I would like to give the floor to my colleague Chloe, and she'll take it from here, right?
Chloe, just a second. I think we're not hearing you. Try again.
I don't think, maybe, do you want to try? Or I could take that mic.
You want to have this one?
Yeah, why not? Okay. Thank you. Okay. So Albert just gave us a pretty good crash course on becoming digital first, but it's a lot to take in, so I'm going to break it down a little bit. What does it actually mean for your organization? So Pew Research did an interesting study. They measured the number of times that people check their phone, not including answering a phone call or email. It's actually on average 170 times. People check their phone 170 times a day for mindless things. So for your organizations, those are all touch points that are opportunities to engage your customer and to grow your business. So I'm walking down the street and I pass Brooks Brothers and I get a notification on my phone. And what it tells me is that the shoes that I was looking at yesterday on my computer sitting at home are on sale. Great. I'm standing in front of the store. I put the shoes into my cart and I get an ad pop up. Oh, look, you can buy black pants also. Add those into my cart. I pay on my phone. I walk into the store, pick up my stuff, and I leave. That's a great experience for a customer. It's easy, it's mindless, and I've done it when I've wanted and how I like. So how do you actually get there as an organization? Companies these days are bogged down with legacy systems. They've got siloed data sets, they're fragmented, and these large monolithic applications. So the problem there is quickly bringing new features, products, and different functionalities to market. So I think a great example is Chase. Chase is the largest US bank. What did they do? About 7 years back, they wanted to move to a new next generation, modernized retail banking experience. What they ended up with was this omni-channel experience. So start anything on any single device or channel, everything is saved, and you can move to the next one. They had integrations with fintechs and with different third parties in the market. So how did they get there? They spent 2 years just laying the groundwork for this transformation. 2 full years they spent educating their organization, building agile teams, bringing in testing automation, and moving, and this is key, moving to this modular architecture, this Lego-style architecture, moving away from these monolithic applications. And the result was reduced development times, bringing their development times down from 6 months to 2 weeks. That's a huge, huge change. So when you're looking at these transformations, at Backbase, what we recommend is adopting these microservice Lego-style architectures on the front end. And ultimately, the question for your organization is how you're going to get there. And in a nutshell, there's 2 ways. You can build the platform or you can buy the platform. And there's pros and cons to each. Of course, if you build the platform, you've got the ability to customize it. It's flexible, more costly. Buying an off-the-shelf platform, you're going to increase your time to market, but you're stuck with product roadmaps and limited customization. But ultimately, to get to that point where you can easily bring new features to market and bring your customer at the center of the experience, we do recommend moving to these platform models. And that's about it, unless you'd like to add anything.
I think we're through.
Okay. Any questions? Right.
En español. Thank you.